Politics moves markets. If you don't believe me, look at what's been happening with the stimulus. As President Trump, over the past week or so, every time the stock market goes down, he says, stimulus, go big. The stock market goes up. And then we get some bad stimulus news and then goes back down. Then he says, stimulus, go big. And it goes back up again. Well, yesterday the stock market went down again because Mitch McConnell said he wasn't going to accept any big stimulus bill. The stock market goes down. So this government involvement in stocks it's insidious. It's there. And so if you are going to invest in the stock market, please do not invest in stocks that are irrationally tied to the government. So now I want to talk about 5 different stocks that I've been looking at that you should avoid because of their government connections and because of government involvement in these stocks. And if you have these stocks, you better be a smart day trader who can watch the minute-by-minute manipulations of these things. But if you're an average investor, or you have some of these stocks perhaps in your IRA or 401k, please pay attention. All right, we're going to go through 5 of these stocks. Let's start with number 5. Let's talk about Facebook. So Facebook, and then frankly, number 4 on our list is also there. But in the past few hours, as we reported in a newsletter today, the FCC, the Federal Communications Commission, is now going to regulate and take over social media. Yes, their salad days are gone. Their salad days of pretending to be just a social media company are gone. They are a media company and therefore should be regulated by the FCC. It has bipartisan support in Congress. They're sick and tired of the manipulation of this content for political reasons or otherwise. Of course, in the past 24 hours, we saw Twitter go down. So number 4 on my list here of stocks is Twitter. So these two are basically the same, Twitter and Facebook. Both publicly traded companies, both now about to be under government control, just like NBC, getting FCC license approval, etc. Being probably, the broadcast networks have to give co-equal time to candidates. Imagine that. How in the world are these companies going to operate when people are publishing information for different political candidates, giving co-equal time to social media? These things are about to change dramatically. And then, of course, Twitter yesterday had a huge outage. Twitter was down for hours during the town halls last night, by the way. So if you were trying to read Twitter last night during the town halls, done. But of course, all of this is on the heels of what happened with the Hunter Biden story over the past 48 hours, which we covered here. As they censored individuals posting the New York Post story about Hunter Biden's email scandal. Both platforms said they weren't going to allow that article to be disseminated. To which the federal government said, wait a second. Is that right? This large media company is now going to be censoring news? So again, please avoid these stocks if you know what's good for you. As government intervention continues to climb with these companies, be very, very careful. Number 3 on my list is American Airlines. The U.S. airline industry received a $25 billion aid package. And here's the stock, by the way, over the past few months. Look at this. Come up and down a little bit, but the U.S. airline industry is not going to recover anytime soon. And this is why Warren Buffett and smart billionaires dumped their airline stock. They received a $25 billion aid package that's all pretty much expired and dried up on October 1st. More aid, of course, is in that stimulus bill, but it hasn't passed Congress, so they're not getting anything. American Airlines has said that this was the worst or most challenging quarter in American Airlines history. So you might look at this and say, hey, this is an opportunity for us to buy. But the problem with that is that American Airlines, and my second stock on my list, has so much involvement now and reliance on the federal government that your savings and investing would be tied to what the federal government does. Relying on $25 billion in aid, 19,000 furloughs and layoffs. Then if the government comes in and bails them out, takes ownership of the airlines, buys up huge pieces of it in a loan program, that's why Warren Buffett jumped out. So if this is in one of your retirement accounts, you need to be careful. Number 2 on my list is another one of these travel and leisure stocks, and that's Carnival. Let's take a look at these numbers from Carnival over the past few months. New restrictions in place. The stock is down 70% year to date, $15 as of yesterday, and it's showing no signs of recovery anytime soon. And of course, there are new lockdowns, new travel restrictions. Who's going to get on a cruise ship? There was some cruises that popped up that started, I think, in Norway. There was a Norwegian ship. We reported on it in our newsletter. By the way, you can read our daily newsletter, our investing newsletter, Morning Invest, by going to morninginvest.com. It's totally free, so please sign up. We're going to get to our number one stock in a second. But anyway, in Norway, we covered this in the newsletter. There was a cruise ship that started out and all kinds of infections within a short amount of time. Done. Closed back down again. Who's getting on a cruise ship? Why would you invest in that? You have to think government involvement in these. So if you're investing in something where the government controls your ability to travel, cross borders, have more than 5 people in a group in any one particular area, if you're at the mercy of the government, think again about investing in something like that. But again, how many of you watching right now would get on a cruise ship? No way. I mean, I don't mind cruises. When I Disney cruised the kids, and it was a lot of fun. But they're already a petri dish. And so our number one stock that you should avoid because of government involvement is a company called Fastly. Fastly stock. So what is Fastly? You might not have even heard of Fastly. Well, they plummeted big time because of government involvement in TikTok. And see, that's how a lot of these reverberations happen. If you're not paying attention to politics, you're not paying attention to what the federal government is doing, it has an adverse effect and a ripple effect on so many different companies. So everyone's talking about TikTok, right? They're going to be banned. They're going to kill the app in America, or Microsoft's going to buy TikTok. China, is going to be spying on us, so we got to get rid of TikTok. Well, Fastly happens to be a company that actually provides all of the technology, the behind-the-scenes technology for TikTok. And we're not sure why their TikTok is plunging so much and their usage on their platform, but Fastly is the company that basically provides all the content. And their stock has plunged because of government involvement in TikTok. What's so weird, though, is that if you look at these data points here, they're plunged nearly 30% Thursday morning. And that's because TikTok did not meet expectations. What's weird is, though, about this whole thing is that TikTok is still available. So the mere mention of TikTok being bought up by another company and the app is still available has driven down usage. So there's this psychological effect now for people thinking TikTok is going away. So people aren't using it as much, even though it's still there and nothing has happened yet. So Fastly stock plummets, and it's because their biggest provider, their biggest customer is TikTok. So if TikTok goes away, then their entire revenue plummets. So all of these people that owned Fastly stock just lost a lot of money. Again, all because President Trump opened his mouth about TikTok and this ripple effect. So that's why I just want to make this point that all of these things are intertwined. So when you've got politics, when you've got politicians making comments about where Boeing is going to build a new plant, where China trade war, banning TikTok, we're going to close this border or that border, and you've got some of these stocks in your portfolio or they're in your retirement account, you need to know what's in that account. And this is a time for you to go through your 401k, go through the different funds that you're invested in, and see how many of those particular stocks are tied to government involvement. Because this is how you can lose thousands of dollars in a short amount of time. And I'm tired of people saying, yeah, but it'll bounce back. That is one of the most idiotic things. I can't stand when people say that, because they fundamentally don't understand that you're losing time. You never get time back in investing. Time is the enemy. And so all of these people in the 2008 crash right? They lost so much money in their 401ks. I mean, I was surrounded by people at Fox at the time who had 401ks wiped out. Some of them at retirement age. So they don't have time to make that up again. But then so many other morons out there who are in their 30s and 40s and said, they're like, yeah, but it, and then 10 years later, like, yeah, it bounced back. Hey, guess what? My 401k has now bounced back to where it was before the recession. They say 5 years later, 7 years later. To which I say, wait a second, you just lost 7 years of investing time because you're telling me that you're just waiting for it to bounce back. I can't stand when I watch CNBC or these other Wall Street shows, they want you to remain ignorant. They want you to stay stupid so that they make money. So if you watch these stupid shows, you watch mainstream media, all they ever say is just buy and hold, play the long game, they say. Play the long game. Put your money in the stock market and just sit on it. And who cares if you lose 5 years of investing because the stock market goes down? It'll bounce back. What happened in those 5 years? If you had that money in something else or something more intelligent than the stocks I'm talking about today, if you had money invested in Apple or companies that aren't going anywhere, if you had money invested in real estate or gold or silver or other real tangible assets that are performing, then the value of that thing might go down a little bit, but the cash flow from that item might be remaining consistent in real estate, for instance. So yes, that $50,000 house might drop in value during a recession down to 40 or 45,000 or something. Who cares? Because there's a tenant living in the property and it's cash flowing. But if you had your money in the stock market and you lost 5 years of investing and it bounced back 7 years later, you just lost 5-7 years of your life. You don't get that back. So you need to be smarter with these investments. So those are 5 stocks. I'll rattle them off again. Facebook, Twitter, American Airlines, Carnival, and Fastly. Check to see if any of those are in your portfolio. Or if you're invested in those, seriously reconsider given this government involvement in those stocks. Smash that like button if you'd be so kind and subscribe to our channel. We also have our investing newsletter, Morning Invest, which goes out every morning where we cover business news that I think is important for you. Just go to morninginvest.com and subscribe to it. It's totally free. It won't cost you anything. And you can read it in about 5 minutes over your cup of coffee in the morning.